Most of you, I think you attest to this, one way or another. Everyone feel the pinch of taxes. If tax was a person, surely most of us were gonna call him or her unloved one, and he was going to get that trophy. Well, unlike other things that we don't love, sometimes we decide to ignore them, but not with tax. So therefore, some few tips will go a long way to minimize and reduce your tax liability. So I'm gonna share 7 secrets today that helps you to save on tax. So it's tax saving time. So grab a coffee, water, and let's dive deep into these 7 tips. Hi everyone, my name is 𝐟𝐨𝐫𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵𝐿𝐵 to this channel, subscribe. If you are a returning subscriber, thank you. Why don't you just hit the like button and comment and even the notification bell so that you don't miss out on the premium content we share. In South Africa, the financial tax year for individuals is February. And as we begin February, 1 or 2 tips I'm going to share today can actually help you reduce your tax bill. If you implement this one in this month of February for your 2024 year, you are going to save. So let's unleash ways to save on tax. Stay tuned. Tip number 1, unlock the power of tax-free savings account. This little beauty is like a tax-free haven for your money. It's like having a secret saving account where your earnings grow completely tax-free, even when you withdraw them. That's right, there is no tax on interest, on dividends, or capital gains. It's like a magic, but it's true. Here's the catch, however, there is a 36,000 annual limit and a lifetime limit of 500,000. So start early and make the most out of this tax-free opportunity. If you have a tax-free savings already, just know that the earnings are totally tax-free, so relax. If you don't have yet, start planning and start having that tax-free savings, right? So let me just talk about the few advantages of that. Number 1, tax-free growth. Your investment in earnings grow completely tax-free, both while invested and upon withdrawal. Number 2, increased savings. It encourages long-term savings with consistent contribution while you have tax-free. And also it's flexible. You can actually withdraw any time, although you have an annual limit and lifetime limit. Tip number 2 is double up your retirement funds. So you think savings for retirement is just about future security? No, think again. Contribution to the retirement funds are tax deductible, meaning you save for your future and you reduce your tax bill today. That's a win-win situation. So this February, if you haven't put something in your retirement fund, if you do not have one, I can assure you that you will actually get a tax deduction. Contribution, the contribution you make, you can deduct each year at 27.5% of your total taxable income or your remuneration. So this limit is a maximum contribution that qualifies for tax deduction. That is currently 350,000 a year. So don't worry, you may actually reach this limit if your remuneration is above 1.27 million per annum. In simple terms, if you are earning above 105,000 per annum, then you get onto that limit. Let's talk about the advantages. Number 1 is the tax deductions. So reduce your current taxable income by contributing to your retirement fund, lowering your immediate tax burden. Number 2 is your retirement security. Build a nest egg for your comfortable future through long-term investments and compound interest that you earn from the contribution that you would have made. Number 3 is normally, in most cases, employer matching. In many cases, employer contribute additional funds to your retirement fund, boosting your savings potential. Imagine paying less tax now and enjoy a more comfortable retirement later. It's a no-brainer. Tip number 3, donate to make a difference and save on tax. Did you know that supporting causes you care about can also bring a tax benefit? Donation to registered PBOs can earn you a deduction of up to 10% of your taxable income. It's a chance to give back to the society and get a tax break break simultaneously. Whether it's education, healthcare, or environmental protection, find a cause that resonates with you and make your tax savings meaningful. What is the advantages of this? Number one is the tax benefits. You deduct up to 10% of your taxable income for donations to registered PPOs, effectively lowering your tax burden or your tax bill. Number two is supporting good cause. Contributes to organizations you care about and make a positive impact on your community or in your society. So also number three is double benefit. Combine financial gains with personal satisfaction by giving back to a worthy cause. Remember, blessed is the giver than the receiver. There is joy in giving. Tip number four is your medical aid, your health, and the tax thereof. Being part of a medical aid scheme not only safeguards your health, but it also comes with monthly tax credits. That's like a direct discount on your tax bill just for taking care of your health. For most people who are under 65, the monthly rebates, you can get monthly rebates. You get a discount on your tax bill based on your medical scheme contribution. It's about 364 for one person or 364 for your first dependent or two, and 264 for each dependent thereafter, right? For people that are over 65 or more or with disability, even better deal. You get higher percentages of your medical expenses and extra contribution back as a tax relief. Important things to remember is this credit replaced the deduction used before. So it applies to the tax year, obviously starting from 1 March. There are limits to this, so be sure to understand everything. Advantage number one, the tax credits. Receive a monthly tax credit based on your medical aid contribution, directly reduce your tax liability. Number two, improve health. Access quality health care coverage for yourself and your dependents, promoting overall well-being. Number three is the peace of mind. Enjoy security knowing that unexpected medical expense won't significantly impact your finances. That's planning there. So don't miss out on this double benefit, which is protecting your health as well as getting your medical tax credits in your wallet. Tip number 5, track your travel allowance like a pro. Driving a car and showing a logbook. If you receive a travel allowance, keep a detailed logbook of your business mileage. It could unlock travel deductions and reduce your taxable income. Trust me, those kilometers can add up to significant savings. You'll be shocked that you get a refund. Don't let those business trips go to waste. Track those trips and watch your tax bill shrink. Advantage number 1 of this is reducing your taxable income. By claiming the legitimate business travel expenses against your income, you can lower your tax bill. Number 2, eligible expenses. If you use your own vehicle for business trips, you can claim a deduction for the kilometers traveled at the prescribed rate of course. This can potentially offset the cost of fuel and vehicle maintenance. So preparation for potential audits is very important because SARS may request documentation to support your travel claims. Having organized records can make the audit process actually smoother and cheaper. Tip number 6, this is for commission earners, those that earn commission. This one's commission earners, this is for you. Listen up so that at least you can understand. You can deduct commission related expenses like your phone, your stationery, or even your travel costs if they are actually directly linked to earning your commission. That's a big chunk of savings right there. Stay organized, keep those receipts or the records and watch your deduction and actually get those deductions right away. Advantage number 1 for this is it lower your tax burden. Deduct legitimate expenses incurred to earn your commission, like your phone bills, like what I said, your travel costs. You can actually also optimize your financial performance by lowering your effective commission costs through those deductions. So it also helps with strategic planning, encourage efficient spending on your commission-related activities to maximize your earnings and your deductions. My last tip for today is for those that are self-employed. So claim your business expenses. Claiming your business expenses is your financial superpower. Think of it this way. Every cent you spend on your business, rent, be it rent, utilities, your fancy laptops, those creative ads that lend you actually a new client can magically shrink your taxable income. It's your right to claim those legitimate expenses, and doing so, you make a dramatic difference in your tax bill. But here's the catch. You can't just throw random receipts in your shoebox and expect the tax fairy to do her magic. Keeping organized records and understanding what's deductible is key. So, what can you claim might be your question right now. Your office expense, your rental, your utility, your furniture, even your chair, equipment, that shiny camera that I'm actually using right now, I can claim for that. Your marketing and advertising, your online, your social media posts, those amazing business cards that make you look like a million bucks person when you're doing your own business, the travel and the meals that you eat if you're meeting clients or attending industry events, those miles like the traveling costs, those are claimable. Even your professional fees, hiring an accountant like ourselves for your business ship to actually sell smoothly, claim those fees too. They are deductible. Remember, always follow the rules. Keep detailed records of your expenses. Receipts are your best friends. Understand the limits on certain deductions, and don't hesitate to consult us as your tax practitioners if you're not sure. By claiming your business expenses, you are not just saving money on taxes, you are investing in your future. Imagine all that extra cash you can pour back into your business, growing, innovating, and achieving your entrepreneurial dreams. The tax savings journey isn't about outsmarting the system. It's all about understanding it, using the tools available to you, and ensuring you are playing by the rules. By implementing these tips that I've just shared, you are not just saving money, you are contributing responsibly to the society and investing in your financial future. But remember, this is just the tip of the iceberg. Taxation can be complex and specific situations may require professional guidance. Don't hesitate to consult us as qualified tax advisor for your personal advice. Remember to subscribe, like, share, and hit the notification button so that you don't miss out. See you in the next video.